right. Well, but I think we have a chat that we need to get to. Mark Mobius, founder of Mobius Capital Partners, joins us on the show. Hi, Mr. Mobius. Good afternoon. Thanks so much for joining us today. Well, Indian markets have done very, very well. But now, because of the spike in crude oil prices, maybe a stronger dollar index, and maybe because of valuations, there is some voices that are getting a little bit cautious on India. How are you positioned on the emerging market basket, and in particular with regard to weightage on India?
Well, we still have the highest weighting of our funds in India, and we will continue to be in that position because we see so many opportunities in India. Now, of course, there's going to be corrections along the way. We, of course, pay attention to that and have cash on hand to take advantage of these corrections. But we'd like to see maybe a 15, 20% correction before we dive back in. But nevertheless, we're holding on to what we have and adding on the margins because we believe that the opportunities in India are terrific. And the whole picture for India is so positive that it doesn't make sense to reduce our holdings in India.
All right, so India's the top bet. What's the difference between India and maybe the second bet? I mean, what is the current weightage on India?
Well, the current weighting now in India is about 20% and the next would be Taiwan. But as you know, Taiwan is having difficulties because of these problems with China and the U.S. So, we don't intend to increase very much there. Also on the list, Korea. We have a little bit in Thailand, a little bit in Taiwan, rather in Turkey. So these are very, very small positions. So the big one, of course, is still India.
Mark, hi, good afternoon. Got your view and you still remain very constructive. But let's just consider the global context, because a lot of people here are wondering if the global environment continues to deteriorate. When I say deteriorate, I mean the dollar is stronger, say it goes to 110, right? It continues to appreciate, basically, the dollar index. If yields go higher, we had Jamie Dimon of JP Morgan here with us. We did an interview with him. He's kind of indicating of yields in the U.S. Heading higher, a lot higher. He says maybe the inflation fight is not done there. Oil prices are where they are, closer to 100 than they've been for a while now. In this backdrop, I mean, what should be the takeaway for investors? Really, are we saying that we will be largely insulated because of some of the structural drivers which are present here, unlike anywhere else? Is that the way to look at it?
No, not really. Of course, India is going to be affected by these changes you're seeing, particularly with interest rates. I mean, we can now, in U.S. dollar terms, get 5% for deposits, 1-month deposits, which are quite remarkable when you consider where we're coming from. So this is very attractive, and it gives us thought for investing in equities when you may see things coming down. So there's no question that there's going to be a lot of angst when people look at these interest rates. However, I believe if you look at the money supply growth in America, you'll see that it's come down dramatically, the growth rate. And that means the Fed is unlikely to raise interest rates. If they do, it'll be a very, very small amount, at all, if at all. So therefore, I think we're now at the peak of the interest rate cycle, and going forward, probably going to be coming down. So if we take a long-term view, it doesn't make sense to reduce our Indian holdings, given the fact that we're taking a 3 to 5 year view. Of course, for those people that have no cash, then it makes sense for them to reduce a little bit. But otherwise, India seems to be the place to be.
And is a lot of money still, according to you, I mean, of course, I mean, there's very few people as well networked as you, Mark, in emerging markets and amongst emerging market investors. Is there still a fair bit of sort of money waiting to deploy in a market like India?
Yes. You see, you must remember that for the global investors who must have exposure to emerging markets, they're really in a bind because they've had to get out of China, or their holdings in China have been wiped out to a great extent, and they have to look where else. Russia's out of the question. They've already lost 7% in Russia, where do they go? It's India is the only other place. So that's the reason why I believe that you're going to see more and more money coming into India, simply because people have to get exposure to emerging markets, and India is the place to be within this emerging market spectrum.
Mark, is this 20% India weightage the highest ever in your portfolio? Is this the most bullish that you've been on India?
Yes, this is the highest so far.
Okay, and on an average, what's been India's weightage, say, in the last 5 years?
It's been anywhere between 5 to 10% in that range.
Okay.
And we've been increasing. Of course, we've been helped by the market as well. You must remember that the market has come up and our holdings in India have done very well. And so as a result, the weighting has increased.
Okay. All right. Mr. Mobius, what about, the banking space out here? I think the last time you spoke to us, you were not very gung-ho on the banking space, earlier this year. But now we have a couple of large banking names out here, namely HDFC Bank, that is giving you valuation comfort. What's your view? I mean, how are you approaching this space, given your weightage on India?
Usually, I'm not too keen on banks, simply because of transparency is not very good with banks, as you know. Very difficult to know where the bad loans are hidden. That's not a comment on HDFC. I think there are some incredible banks in India, but we're finding better value in the software area, in the industrial area, in the consumer area. So we prefer to be in those areas as well. One of the things to look at, by the way, is the bond market. The Indian bond market is expanding. As you know, JP Morgan, I think, have added India to their index, and that's going to be very positive for some of the banks. Of course, that's for sovereign bonds, but also bank bonds are probably going to do well going forward.
I got that. By the way, one of the things which people are expecting with India's inclusion in the JP Morgan bond index, Mark, you will have a one-stock adjustment of some $30 billion because India's weight eventually will rise to about 10%. And then annually, estimates are that this is, of course, into GSECs, we'll receive about between $15 and $20 billion annually. So that's going to be a big deal. Only, of course, goes into effect middle of next year. But what that should do is reduce cost of capital, especially since we're talking about financials, especially those who are dependent on wholesale funding. Do you see that as a bit of a re-rating event for that sector? I mean, permanent reduction in cost of capital.
No question. This is going to help India generally, because being in that index to begin with will put notice to people that they've got to be exposed to the Indian bond market. And of course, that'll filter down. The sovereign bond market will filter down to the industrial bond market in India, and that would be very good for companies. So I believe going forward, that's going to be something that we have to watch carefully because it'll be positive for India generally.
You gave us a view on U.S. interest rates. So let me just throw one more in on the global side. You said you think U.S. interest rates have peaked. What about oil prices, Mark? Do you have a firm view on where that is headed?
I think we're probably at the high point now. As you know, more and more people are switching to alternatives. And I think we're at the peak of oil prices. I don't see it going much higher, particularly with the strong U.S. dollar.
Mark, you started off by saying that you see tremendous opportunities in India. You want to take us through some of your recent India bets?
Well, as you know, we're still in persistent systems and a number of, we're looking at other software companies. So lots of opportunities.
Okay.
So you're looking to up your India technology exposure. You have persistent, but you're looking to add some more other IT stocks?
Yeah, what we're particularly interested in is the hardware area, because we believe that Indian hardware in this technology space is going to be very, very good going forward. So I think that's something we have to look at. We're waiting for listings, but I believe India is going to become a major manufacturer of semiconductors and other technology hardware.
Okay, all right. Mark, in the past, you've discussed a few stocks. I think Metropolis is a stock that y'all liked earlier. APL Apollo Tubes has worked very, very well for y'all. Anything more you'll have added, or have you trimmed positions on any of these?
No, those are the ones that we have and we continue to hold.
You know, just to pick up from what you said, right? You said you expect hardware to be a big theme. We have on the so electronics are the second largest import for India after oil, and the government through its production-linked incentive schemes is really incentivizing local companies to make a lot of what we import right now. I mean, these are everything from white goods to laptops recently, and many other items as well. And we've got lots of listings recently over the last couple of years. I mean, there is Dixon Technologies. I don't know if you track these. Amber Enterprises. There is Sirma, Keynes, and a bunch more. Have you or your team looked at these opportunities? Because that's one theme which is which perhaps has a secular run. Of course, you'll have to square that off again against valuations which have already which are north of 50 times for all these companies.
Yes, we're looking at these, but the problem is many of these companies are not or have not yet reached the return on capital criteria that we use. We look for at least 20% return on capital, and many of these companies have not reached that yet. So we're watching them very carefully and looking for opportunities. But one of the most important aspects of this whole picture is that the Indian government is going to have to allow more and more imports of components so that companies that are manufacturing these hardware products will be able to integrate these components and then re-export. So that's something we have to watch going carefully. But of course, more and more, there will be manufacturing of vital components in India.
Mark, a theme which has done exceedingly well in India are the ones tilted towards domestic growth. Government capex spending has been trending at more than 25%. Consequently, industrials, infrastructure, capital goods companies have doubled in stock price. Their valuations have gotten re-rated. And this has been happening for the last 12 to 18 months, perhaps even longer. Have you played this entire theme, or have you looked at it and shied away? Tell us your thoughts on this domestic industrial theme.
Yeah, we've looked at that. Unfortunately, many of these companies do not meet the criteria that we have as regards to return on capital and debt. Debt is a big, big issue. Some of these companies have too much debt. So we have to be very cautious when we look at them. Also, companies that are too much dependent upon government contracts can be quite vulnerable. So we prefer companies that have a variety of customer base, a big customer base, which could include the government, but also the private sector.
Mr. Mobius, what about gold? We have chatted about it in the past. With the current setup globally on equities, bonds, where does gold fit in?
I love gold. I think gold is a good thing. You've got to have some gold. Of course, many people say, oh, gold does not pay any interest, does not have any earnings. But at the end of the day, if you look at a long-term gold situation, you'll see that gold has been a great investment from the long-term point of view. By the way, a recent news article about Singapore's holdings of gold is very interesting because they have recently increased their holdings of gold pretty dramatically. So that's something to watch very carefully. And no question that governments around the world continue to hold gold and increase their holdings of gold. China is probably another good example.
Mark, one of the themes which has played out in so many sectors, this China plus one, as they call it, has been India taking the place which China is perceived to be vacating. Maybe they're not vacating, but what's your sense? Is that a permanent kind of a shift which has happened, or because it seems permanent when you're in the midst of it, but when you pull back and look at the bigger picture, what's the sense? What's your sense?
There's no question this is a permanent move on the part of companies around the world. But you must remember that China is still a huge exporter of products around the world, not only to the developed world, not only to Europe and US, but to the emerging markets world. So this is something to pay attention to. Of course, at the end of the day, what we're seeing is the growth rate of this trade, and of course the growth rate of China GDP is slowing down. We're looking at maybe 3-4% growth for China going forward, but for India the growth rate is much higher. So you're going to see India gradually coming up to equal China. I'm not going to say it's happening overnight, but it's going to happen within the next 10 years, I believe, at the rate India is going. But you must remember that China is still a huge market and a very, very important player globally in the trade picture, so we can't ignore it.
Mark, at the moment, how are you playing this manufacturing of technology, hardware, semiconductors in India? Or is this something that you're watching? Yeah, go ahead.
Yeah, what I'm doing is I'm watching it very carefully, looking at what companies are being listed and already listed, looking at the numbers, and looking for a company that meet our criteria of return on capital and debt, etc. So I think this is sort of a long-term kind of development that we're going to be seeing, and in the not too distant future, we're probably going to see an Indian type Apple or an Indian Microsoft or an Indian whatever in the tech area, and they're going to be big companies.
Just one last question, Mark. I mean, very near term, this U.S. government sort of shut down business, the drama which plays out every few months. I mean, the deadline is this weekend. Do you think it'll get done? It always gets done. Any thoughts at all? Are you paying any attention to it?
I haven't been looking at it very carefully, but I think there's so many things happening politically in the U.S. It's still something that we have to watch and take advantage of. But at the end of the day, I don't think it's something that we can really ride on in terms of the market movements.
All right, Mark, we'll leave it there. Thank you very much for joining us. It's always a pleasure for all of us to have you here on CNBC-TV18. Thank you for taking out the time, and thank you for speaking with us here. Thank you very much. So that's Mark Mobius, one of the most sort of astute watchers of emerging markets out there, still very bullish on India. 20% weight. That is a couple of percentage points higher than what India's weight is in the MSCI Emerging Market Index. So he is overweight, continues to be overweight. While we were in conversation with Mark,